Are you a seller out there that's struggling right now because you don't want to give up your current interest rate? You have that low interest rate. You may need to move, you want to move, but you just don't want to give up the interest rate. We are going to go through and let you know how you can actually get a lower interest rate. I'm Pamela DuBois with Dream Real Estate TV, and today I have with me the amazing Mark Neely with Neely Lending Group. And we're actually going to talk interest rates, we're going to talk real estate, and we're going to talk about Mark's personal journey through everything that he's been going through. And Mark, thank you so much for being with
Thank
me.
you.
I so greatly appreciate it.
Thanks for having me, Pam. Appreciate it. Glad to
No,
be here.
you're so welcome. You're so welcome. And I love it that you're actually, you're doing videos, you're out there, you're putting out content, you're just giving so much right now. Tell us a little bit about Mark, I guess, as far as the business side of Mark and starting with
Sure.
mortgages. I know you've been in the business for quite a while.
Yeah, I started in 96, so 27th year. Um, just opened my own mortgage brokerage branch. So Neely Lending Group, we're powered by Go Rascal. Go Rascal is in New York City, and I have a branch here in Nashville. So I was born and raised in Nashville, and been mortgage banking all that time. I went to the broker side, which my first 5 years in the business, I was a broker. Went kind of the retail side. Always did miss the broker side because I knew it had more options, more flexibility with rates. Uh, my friend Scott Valens, who owns Go Rascals, the CEO of Go Rascals, he's been after me for a while. And you love it. You plug in here, you have more options. So the reason for the transition there was, sure enough, I mean, I'm able to provide better pricing. We get raw pricing. So, I mean, I get wholesale pricing from people. So when there's situations where, the builder or the seller needs some help, or the buyer needs some help with concessions, then I can step in and help them much more easily than you're dealing with a retail shop where you have multiple layers of management and everyone has to have sort of their cut.
Mhm.
I think the big knock on brokers, if there was one throughout the years, was, oh, you lose some sort of control of the file, which now that's really an old adage. It's not really true anymore. Now you have United Wholesale Mortgage, which is the largest mortgage company in America, and they really cater to us, the brokers. So about 60 to 70% they have of the market share for brokers, and that's a lot. But so you have them, and then you have a lot of others, and then really the other I wanted the realm I wanted to be in is I wanted to be able to provide fix and flip, bridge loans, ground up construction, um, private money lending. Those are now all options that I have for builders, contractors, developers. So now I'm able to actually go in and, maybe a developer is needing what's called horizontal money, and they want to be able to buy the land, and they need to get the land ready to build on. Well, now I can do those types of loans. Before, they have access to any of that. So I've put about 5 or 6, 7 different tools now in my toolbox that I just didn't have before, all while still being able to provide great service to my past clients and my realtor partners, the financial planners, CPAs, divorce attorneys, people that I work with. So um, that's kind of what I do. I've been in the top 1% in America and mortgage broker as a mortgage broker for the last 20 some odd years. And my passion is to help people beat anxiety, depression, and addiction. And that's kind of my story. I've got a lot of things in the past several years that I've overcome, and that all culminated really in the last 18 months. And here we are today.
Wow, that's incredible. And you actually can lend in all those areas, which is good. It's like a one-stop shop, right? You can get
Licensed
everything.
in 20 states. So I help a
Yeah.
lot of people in here. I have a second home in Florida on the Panhandle, and then licensed in about 18 other states.
Wow, that's incredible. Where are you in the Panhandle?
So the Seaside area, if you ever saw the movie, um, Jim Carrey, The Truman
Okay.
Show. So it's filmed there. And
Oh,
anyway,
okay.
it's so yeah, The Truman Show. So but it's Seaside, Rosemary Beach, Santa Rosa Beach. It's an entire area called County Highway 30A.
Okay.
and they call it the Hamptons of the South. So it's just incredible. It's in between Panama City and Destin. So you
Yeah.
can fly into either one of those uh, airports, and they both would meet. And so my home is sort of in the middle.
I've heard of
Uh,
Rosemary Beach, and
mhm,
I've been to Destin. I know Destin
mhm.
is absolutely beautiful. My son is stationed um, near Pensacola. He's in the army,
There you
so
go.
yeah,
Sure.
that area is just
Yeah.
absolutely beautiful.
So the
So going
30A
back,
is an entire area that's like incredible. Um, I mean, the amount of development that's going on through there, it's truly looks like the Hamptons. I mean,
yeah,
it's incredible. You have $20 million homes on the beach. I mean,
yeah, yeah,
$15 million homes, so we're not right on the beach. Someday maybe we'll be right on the beach, but I mean, you don't have to be, to have the experience down there. But it's really a laid back area. No golf courses. There's no marinas. Um, it's all about the lifestyle experience down there. So Seaside is kind of the place where a lot of people go. It's all, I mean, 30A really is not that long. It's just, a few miles
yeah.
long. And then there's all those little tiny little beaches that they just have their own little area. So we get down about once a month. I have some
That's nice.
realtor partners down there, so we go down there and serve them, and we'll be down there for spring break or fall break. It is coming up,
Yeah.
um, and so in a couple weeks. But yeah,
So, all right, let's talk a little bit about interest rates. Where do
sure.
you think the interest rates are going? If you
So
had a
rates
crystal
are.
ball, I should say.
Well, there's really a couple of camps, and one camp says it could get uglier before it gets better. So
Mhm.
some people think 9% before we, see 5%. So it just, it's an election year. I think it's really remains to be seen what is going to happen with rates. I don't think anyone really has a crystal ball. I think right now there's been so much uncertainty. There's such a spread in the 10-year Treasury, and so with 30-year rates, and normally there's not that big of a spread. Inflation has come down quite a bit,
Mhm.
but it seems like we're going to have to get into the 2.5 to 3% range before we start to see some relief in mortgage rates. So what's happening, I think, is this anomaly. We've just never seen this happen before, where people are sort of frozen in their current homes, and understandably so. I mean, they have a rate that's in the twos or threes, and when they look at the prospect of moving and what their payment would be, it quickly becomes a reality that it doesn't make sense to move. I mean, they're going up in payment, maybe going down in house, perhaps even. So
Right.
to even move up, it's difficult. So what is holding the market up now, or all of the people that really need to move have to move? You have less than 1 million homes nationwide that are on the market, and really about 400,000 of those are actually under contract. And so it's not like you can go knock on someone's door and say, "Hey, I like you buy your home." It's already under contract. So truthfully, the net effect is really about 600,000 some odd homes on the market available to buy for an entire nation of 300 plus million people. And that lack of inventory just creates a tremendous amount of a burden on supply. And so the demand, there's still more demand than there is supply, even though demand has shrunk. We're still at 80%. We're still going to close 80% of the homes that closed last year, even though rates have nearly tripled.
Yeah.
So if you think about that, that's pretty incredible. I think a lot of people think, well, we're doing half the transactions. It's not the case. I mean, it's 80% of the transactions that we're doing now that we did last year. But we're moving into the winter. Historically, at least in many metro areas, December is the best. If you look historically where prices are their best, December happens to be the best time to buy for a buyer.
Mhm.
That's when sellers are typically going to reduce their price because people start to, um, you know, they're not looking as much. The buyer pool goes down. They're getting ready for the holidays. Winter is upon them. in areas in the north, and or where it's snow or inclement weather. Maybe you're not showing as many homes, so that's where people can pick up maybe a little bit better of a deal. Look, Pam, all we can do now is advise our clients what can we do to win. So
Right.
if you can afford to wait and wait it out, there's a couple of risks with that. One, you risk rates going down, and when rates go down, that's going to actually amplify the buyer pool. So more buyers are going to enter the market, more sellers are going to put their homes on the market, but it's not going to be nearly enough. It's
Right.
not going to be nearly enough to sop up the amount of buyers who are immediately going to enter the market. And not only that, you're going to have the institutional buyers who are going to rear their head again, the BlackRock, the State Street, the Vanguards, and they're going to, they're looking at their metrics. And when rates get down, low sixes, definitely into the fives, it's going to create a frenzy again. And that's where sellers are going to start to have a little bit more of an upper hand and be able to raise prices. And so when things slow down, you got to watch the media right now, because the media will present it as prices are going down. It's not that prices are going down, it's that the pace at which they're going up is slowing.
Right.
And
Right.
so most areas, I mean, you're still seeing everyone, all of the economists, all of the major economists at all the institutions that track housing readjusted their predictions, their forecasts for end of year, and nearly all of them had an uptick, a gain for 2023. So even with rates going from the twos and threes up into the sevens, you still have enough demand to hold up a market. And that's the reason why prices are where they are and they're not going down. There's been no crash as many predicted.
Yeah. Yeah. I mean, I totally agree with you too. Also, like, the rates go down, yeah, you're right. We're going to have a flood of buyers on there. I remember, and I was thinking, it's like when we bought our first house, we were at 12.5% in 1985, 1986, right? And it's like we went down, it kept going down from there. So when you actually go into the reality of having a mortgage that's 2+%, it makes it harder for a seller to give that up and go to a 5, 6, 7%, maybe a 6, 7%, right? So talk to us
Mhm.
about buy down. If there's a seller out there that really needs to sell and they're just having such a hard time with giving up that interest rate, right? There's
Right.
such a thing as a buy down. A lot of people don't know what a buy down is. Can you explain to us what a buy down is?
Sure. So when you're talking about a buy down, it's buying down the interest rate. And so there's an upfront cost for that. It could be 2%, 3%, 4%. And that the more you're putting more, the higher the price. And 1% when I'm saying of the loan amount, 2% of the loan amount, 3% of the loan amount. When you're doing that, you're able to buy the rate down with upfront costs. So you're paying some prepaid interest to get a lower interest rate over the course of the term of the loan. And so there's such a thing as what's called a 2-1 buy down, which is probably the most common. So the two most common are going to be a 2-1 buy down, which I'll explain, which is a temporary buy down. And then there is a permanent rate buy down. Now, with a 2-1 buy down for about 2 to 2.25% of the loan amount, the rate is going to be lower by 2% the first year. So let's just say rates are base level 7.5% right now. Unfortunately, that's we're in the seven. So let's
Right.
just use 7.5. Okay. So the first year in a 2-1 buy down, the rate would actually go to 5.5%. It would stay there for 12 months. The next year it would go to 6.5%. And then after that, it would set at after 24 months, it would go to 7.5% and stay there for the life of the loan. The thought process with that would be that historically, mortgage rates follow inflation. So remember, the Federal Reserve does not set mortgage rates; they only set short-term rates.
Right.
But there's often an indirect relationship with the two. What really dictates mortgage rates is the way that mortgage-backed securities are trading. So treasuries, the way these products are trading on the stock market or on Wall Street, this is what affects mortgage rates. And so there's just a lot of uncertainty. And what you had was you had the federal government buying their own mortgage-backed securities and buying mortgage-backed securities and artificially holding rates down lower after 2008. Once they stopped, the quantitative easing, then which was what they were doing. Now they're actually not buying them, and so now we've had rates go up. So it can be difficult right now to predict what's going to happen. So let me talk about like the permanent buy down. A permanent buy down is where you're paying points, which is again 1% or 2% of the loan amount, and you're getting an initial rate that's lower. So the question is, why would a seller do that? Well, if you're in a competitive market, where it's still multiple offers, you're probably not going to get a seller or builder to pay a buy down. But there's still plenty of markets that are out there where sellers and particularly builders who need to move these units, they need to get them off their books, who are offering massive interest rate buy downs. We're seeing people, with builders, they're offering 5%, rate, and some of those. Now that cuts me out. I'm not involved, but if a client, can get that, great.
Yeah.
They're not needing my financing, but it's usually because they own the mortgage company or they bought a block of rates and they at a certain price on Wall Street, and they bought them at 5.5%, and they just said, here, this is what you get if you buy a home here. However, let's just take John and Sally Doe that decide they need to move and they need to get their house sold, but they also need to buy. They can obviously offer in the MLS, an interest rate buy down on behalf of the buyer that's buying their home to help generate activity, and people are going to be attracted to that because I don't really want a 7.5% rate. I really need something 5.5. But then it's now the onus is on them to actually go out and find a home where they can get a rate that's actually more competitive, because really, historically speaking, it's going to take probably in the mid fives before these people that have a rate that's below 4% to start
Right. Doing
saying
anything.
that it's worth it. Yeah,
Yeah.
otherwise they're just not going to feel like it's worth it.
Right.
And that's the predicament that we're in right now. It's really an anomaly. We've never seen this sort of situation where all of these people are sitting on a low rate. And the reason why is it because it happened so fast.
Yeah. It did.
All of a sudden, rates tripled in a matter of months,
Yeah.
you know,
Really did.
and that is where, you know, everyone is sort of just like frozen, and you can't blame some people. I mean, if they don't need to move, they're not going to. Now, I think what's also going to add to the inventory issue is a lot of these people may never sell their home. I mean,
Right.
the home I bought in Florida, we got a 2 5/8% rate. Why would I ever sell that? I mean, if I can avoid it, I can, I want to hang on to that home as long as I can, because that money's that cheap is likely to never come back around again.
Right.
So there's a lot of pressure on inventory. Builders underbuilt for the last 10 years. The last decade, they built less homes than they had in any previous decade dating back 50 years. So think
Right.
about that. They're building more homes in the 70s and 80s than they built in the last decade, because after 2008, builders got burned, they got spooked, they got taken down, and you had a lot of millennials who didn't have the demand that was there to buy homes, and so they slowed down. And then you had the supply chain issues, with COVID, and they're still got supply chain issues, and so it's a problem. They're not going to be able to catch up on the build side anytime soon. I mean, it's going to take years to catch up. So what does that mean for all of us that own a home? It's good news in the sense that your home values are not likely to go down because you've got a lot of demand. You have a lot of millennials. We have more millennials turn the age 33 than we have in history. And what is the significance of that? 33 is the prime buying years historically of a new homeowner. So we
Wow.
have so many millions of millennials that are turning age 33, and these people are going to buy a home, some of them, regardless of what
Right.
interest rates are. And then if rates come down, great, they'll take advantage of refinance and and lower their rate and lower their payment and keep on rolling. But at least they'll have picked up their home. So the best thing to do, I think, right now is to everyone assess, do they need to move? If they do need to move, what's important to them? What are they getting out of the move?
Right.
That's maybe not a monetary thing. Is it, your children being in a different school that you want them to be in? Is it closer to work? Your commute's shorter. Is you getting out of a neighborhood you want to be out of into a
Yeah.
more desirable neighborhood, safer neighborhood, whatever? And then look at what is available out there. Who are the sellers that can actually help out with a buy down?
Right, right. You're a wealth of knowledge, that's for sure. My goodness. That's great information, all those stats and everything that you're throwing out there.
A
And
lot of people, say also, they want to know. I'll just mention this real quick, but assumable loans. The problem though with assumable loans, they only are typically available on government loans. So that means your FHA and your VA loans. So conventional loans, it's you can't really assume, your neighbor's conventional loan that you want to buy their home and they have a 3% rate. If it's conventional, you're not going to be able to assume it. And
yeah,
so that's just the unfortunate reality. So that is one that comes up quite a bit. And, I'm out there trying to educate, on my platform, on Instagram,
right.
TikTok, so I put out daily content, but that's a lot about what I talk about, those types of
Yeah,
things that are just kind of misnomers.
yeah. What are your thoughts on sellers that are actually in not forbearance? What is that word? That they were actually basically forgiven not paying mortgage payments during COVID and possibly not paying mortgage payments. Did they do something with that?
I mean, most of the forbearance options are up now. So I had to go
Okay.
back into repayment and, um, they can get financing once they've paid so many payments on time. And
Okay.
now they're back what's called bankable again.
Okay.
Yeah.
Okay. So we don't see those properties, any of those properties going to like short sales or foreclosures or anything.
I mean, there's not enough. I mean, there's definitely not, there's, a lot of people, gloom and doomers, crash bros, as we call them, were predicting massive foreclosures due to a recession,
Right.
which, seems imminent. But however, there's just not enough that's going to affect the market significantly. There's not going to be enough. No one can explain where all the inventory is going to come from to sop up the demand. No
Yeah.
one can really explain that.
Yeah.
And that's the magic question. And so, I think we're poised to have, you know, 2025 is predicted to be the biggest year ever in real estate. I think it could get uglier before it gets
Yeah.
better for 2024. Like I said, who knows? Rates could go higher. But here's the thing: if rates are going to go higher, maybe and if you're needing to move and you're waiting for rates to go down, and if you knew rates were going to go higher, you'd probably think, well, I should probably go ahead and buy before it gets worse. I
Right.
mean, look, I'm out here in the same, I'm an investor myself, and I feel the pain. There's a lot of anxiety, out there.
Yeah.
I don't know about you and your team and your clients and, your buyers and sellers, but there's a lot of anxiety. What are you seeing out there in terms of just people being stressed and, you know, expressing anxiety about this situation?
Yeah, you know what? And so it's like you've got both sides, right? You've got the ones that are actually looking at positive outlook, and then you've got the doom and gloom people. Basically, it's like, oh my gosh, what's going to happen? The rates are low. We're seeing more foreclosures. We're seeing more short sales. But here I'm in the Washington, D.C. area, and I wrote an offer for an investor a couple months ago, and there were 50 offers on this property, right? So there is definitely the lack of inventory right now. We don't have the inventory. How is that going to actually pick up? Where we're going to get that inventory is a good question. Are these sellers going to move because, you know, of the interest rates? But, thinking also if a seller, what their goals are, you know, if they're going to go into their final home, maybe they need to move up. It makes sense for them to actually go ahead and buy that rate down because that's going to be their final home. They can turn around later and refinance. But yes, there is a lot of stress. There is a lot of anxiety out there right now in our world, and not even just for the buying process and the selling process, right? It's just a lot of things that's going on in our world right now. And I'm one to not watch the news. So if you told me we're at war, I would have no idea because I do not watch the news. I have no idea what's going on. But yeah,
Right.
speaking, we're speaking anxiety and going into depression and all things like that. Basically, definitely a lot of that going on right now in our world right now. And wanted to talk a little bit about that with your journey because you've actually been there and
Mm.
talk to us about that.
Yeah. I mean, some not so many years ago, the mortgage lender and real estate profession was ranked, typically ranked as one of the most stressful positions that you can be in, and
Yeah.
vocations. And so, I mean, you're dealing with transactions where people are buying a home or selling a home and moving their entire family, uprooting them. And so there's a lot that goes in, as you know, dominoes that fall. And so, I noticed as a child that I had anxiety, and I think it was officially diagnosed in my early 40s, in my 50s now. And, um, I was on a medication, which I soon realized that probably, I was just sort of a slave to. I really couldn't, it was 60 milligrams of Cymbalta. Um, and it just, at the end of the day, felt like that I was, um, really not treating what the underlying root was. So I decided, to get really down to the nitty gritty and start reading and researching. So I figured out neurofeedback therapy, which is where you have a brain map of your brain. Uh, there's places in your area. If you look up neurotherapy, neurofeedback therapy, yeah, they analyze the trauma that's gone on in your brain. We've all had trauma of
Hmm.
some sort, and then they're able to actually do this therapeutic um, process to where you have like these little sensors that go onto your head,
Uh-huh.
and it actually um, sends signals to create new neural pathways, and actually heals your brain. So it's been around for about 20 years. I go to Tennessee Neurofeedback here in the Nashville area, but that's been a huge help for me. But then even just sauna, cold plunge, cold showers, you know, gratitude, expressing gratitude. A lot of these things are people, they've heard of it, but you actually start doing them, and stacking wins and stacking them all together, then it actually starts to really help. And a CPAP is something as simple as sleep. I mean, I was
Yeah.
snoring and I was waking. I mean, you have a uh, sleep study done, you realize I've been waking up 26 times an hour. And,
Wow.
so you can only imagine, the quality is diminished of your actual deep sleep, your REM sleep. And, these are the types of things, your diet, cardio. Like I hated running, hated riding a
Yeah.
bike. What can I do? I figured, well, I can certainly use a treadmill and crank up the walk. I can walk
Yeah.
and, walk uphill, and and you can actually, the coolest thing, I think, the brain hack or the big hack for me is to read while I'm walking uphill on a treadmill.
Oh,
So now,
wow.
or return some messages or like some emails. So I'm able to do something like two things at once. And, you know, it's just a sort of a whole, time hack, so I'm able to kind of do two things at once. But, my passion now is to help people overcome. I mean, I was, I'd gotten to a place where cannabis was a big part of my life, that I wanted to make sure that that was put in my rearview mirror. So if people struggle with that, it can
Hmm.
be hard to get over. It can be a crutch. It's legal in most states. I will
Yeah.
never shame someone or think somewhat negative of someone for using it. For me, I felt like it was helping with my anxiety. At the end of the day, it
Yeah.
was actually exacerbating it. And so, um, and it really wasn't treating the issues. That my issues still were there.
Yeah.
So I think there's a lot of things people can do. um there's psychedelics that people do that help them sort of have a breakthrough. And really what's going on there is the neuroplasticity in your brain is actually increasing. So when you can
Hmm.
increase the neuroplasticity in your brain can actually get rid of trauma. You can heal. You can get rid of bad habits. I mean, there's people that do psychedelics that no longer drink alcohol.
Yeah.
and so it needs to be in a controlled environment. This is not like, hey, you're doing mushrooms with your college buddies.
Yeah.
This is not what this is. This is actual, you know, science. And so I just encourage anyone to, reach out if you feel like that anything I've said has resonated with you. I'm happy to share anything about my own journey. But it's really been recently that, it was January through March is when I guess it was probably the beginning of December through the end of January is when I weaned myself off of the anti-anxiety medicine. And it was difficult. I mean,
Yeah.
you hear people say brain zaps. Those are a real thing. It's kind of like a lightheaded feeling when you turn your head and your eyes
Right.
feel lazy, but it's just a weird feeling, and it's not cool. Let's just say it's not a healthy feeling. And what's happening is your brain's getting adjusted to not having you know those those
Medication.
medications. Yeah.
Yeah.
So,
It's
but yeah,
incredible.
thanks for asking. I mean, I think now more than ever, like you said, try to avoid things that trigger like news. I mean, unfortunately, the news can be a huge trigger for people. Um,
Yeah.
kind of reporting the negative side of things all the time. I mean, they're in a profit business, so CNBC has wrongly predicted a housing crash like 9 out of the last 11 years. Um, you know,
It's
it's
incredible.
kind of scary when you think
Yeah.
about that. Like it's scary in a way like that that they're just putting it out there and it's wrong every time. I mean, so it's unfortunate. So you really just I'm with you. I think, you have to really sort of watch your screen time and
Yeah.
be mindful of that and do the things, get out daily sunlight, go for walks, do the things that, we our brains weren't designed for all of this, technology and busyness. You have
Right.
to take the time to go back. I mean, think about just even so many decades ago. We just didn't have these screens. I mean, you called someone, if they weren't there, well, you called the next person,
Right.
didn't even
Right.
have an answering machine. And so you rode over to their house or something. So now, I mean, technology can be a blessing. It can be a curse, as we all know. So it's
Yeah.
very difficult because, you know, you sort of just have to have this. Now that it tells you your screen time. And I don't know about you. I'm shocked sometimes, right? About what
Right. Yes, it does tell you. It's like, what? Yeah, you're
I'm
so
doing what?
right. If we could just actually take a break, you know,
Mhm.
maybe 1 hour a day from, just looking at our phone. It's like, when was the last time you actually didn't look at your phone for 1 hour? That probably never
Yeah,
happens unless you're sleeping at night, right? You're
yeah,
constantly, yeah, looking at your phone, looking to see what's going on, Facebook, YouTube, everything on there. So yeah, our world right now has definitely changed so much. And taking that break, when you go outside walking, leave the phone at home. But I love what you said about the treadmill, which is a great idea. You're doing the treadmill and you're doing, answering emails or reading or whatever. So you're actually not even concentrating on the treadmill. You're walking uphill because you're doing other things at the same time. Because sometimes we can actually go, oh, no, I don't want to walk. I don't want to run. But if you're doing something else to take your mind off of it, or maybe listening to some good music or something like that, it goes by really fast. But I think that daily exercise and putting that in your daily routine is really important. And how you start your day is also, I think, really important too, is making sure
hmm
that you have that mindset when you start your day and you're not just getting up and
hmm
rushing out the door, taking some time to, do some devotional or something like that to start off your day. That's me in the morning. I didn't do that before. And then meditation, I think, is one good thing. I don't know if that's something that you do, but meditation's been a game changer for me too.
Yeah, for sure. Prayer, meditation. I mean, you
Yeah,
know,
it's been incredible. So yeah. So let's see here. What else? One thing I would actually like to ask you, if there's a first time home buyer out there right now that's on the fence, they're thinking about buying, but they're not sure this is the right time to buy. Or what advice would you give a first time home buyer right now?
yeah, I mean, what do you stand to gain from buying a home? I mean, there's a lot of benefits of home ownership.
Yeah.
The average renter has a net worth of about $6,000, and the average homeowner has a net worth I think of about, was it $240,000? So it's quite a difference. Um, so it's a pathway to build some equities, to build some wealth. Um, but I would never have someone stretch, themselves to where they're not comfortable.
Right.
Um, I would also encourage, to maybe, if you can, look a little further out away for your first home, maybe not right in the middle of town where it's your city that you live in, because it's going to be more expensive.
Right.
Um, and then if you're handy at all and can buy something that's maybe a little rough around the edges, that, I'm not saying get in over your head, um, but if you can get something that's a little rough around the edges where you could add some TLC to it, then you're going to pick up equity, what's called sweat equity, where you can fix it up a little bit yourself. And I'm not talking about taking down walls, but
Yeah.
cleaning it up quite a bit. So the biggest thing right now is going to be patience.
Yeah.
It's going to take a lot of at bats sometimes, um, and and if you like the home, I would be aggressive in the offer. I wouldn't, because there's just so few out there. If
Right.
you really want the home, then be more aggressive with your offer. If it's kind of like, and here's the thing, your first home's not going to be your dream home. It's just not. I mean, none of us lives in our original first home. So if you can just check off, three and a half of the box of five of the boxes, then maybe that's good enough.
Yeah.
But you need to be able to afford it. I would ask for some concession. You need a great, realtor in your corner that's a good negotiator. Um, and I wouldn't go directly to the listing agent. A lot of people don't even know that, it's the seller that's actually paying the closing, or, the real estate commissions for both sides.
Yeah.
So it stands to reason. You wouldn't go to court and use the defendant's attorney, or vice versa. If you knew it was paid for and you could get your own attorney, you would get your own attorney. It's the same concept. So uh, now, if you're kind of graduated past that and you already know that sort of information, you're kind of out there, kind of in there, and you're getting discouraged. It's just understand that there are some solutions. And you're going to have to be patient, and it's going to take a lot of at bats to maybe connect on one. But in the long run, if you can get a home in this market, I think brighter days are ahead. I
Yeah.
think we'll see lower rates at some point. If you can get a payment that you can afford now and even get some concessions from the seller, and then later down the road when rates are, I mean, almost assuredly, every economist in the world is, is predicting lower mortgage rates at some point. Now, does that mean a year from now, or does it mean 2 years from now?
Yeah.
We don't know. But somewhere in the next 24 months, they should be significantly lower than they are now. By significantly, I mean the mid fives, but maybe low fives. And then, at that point, can refinance. Now, listen, it's not a guarantee you can always refinance. If if you overpay and you don't have any equity, it's going to be hard to refinance. But
Yeah.
like we've addressed that, home values seem to be going to be stable. It seems to be stability there, in terms of home values and home prices, just because of the supply and demand.
Yeah.
That we have way more supply, way more demand than we have supply,
Right.
and so that just bodes well for propping up the values, propping up the home prices for years to come. If you look back to the '70s, you had double digit inflation, double digit interest rates, and prices still
Right.
went up.
Right.
I was just a kid, but if you go back and look at the historicals, that's what was going on. And so I think people are afraid of a crash because 2008, but they need to understand that that was all due to subprime housing loans, which were loans that were given
Right.
to people with a 580 credit score and zero down. And that entire industry evaporated.
Yeah.
It vaporized. There's no, that subprime industry really is a shell, or doesn't even really exist anymore. So the lending is much more strict these days, and so there's not a house of cards to fall like it did. A lot of people, you can watch the movie The Big Short, and it explains it all. But yeah, so that's what I would say.
Yeah.
Don't be
Yeah.
don't be fearful. do your homework, but act
Yeah.
intentionally. And when you see the home that you want, I wouldn't quiver over $5,000 or $10,000 in price. $10,000 is about $50, $60 on a payment. And in the long run, if you looked at 10 homes and made some offers, and now you find you should may as well try to get it, do everything you can to get it, because there's the inventory problem is real.
Right, right. And you know what? Inventory problem is real. You're so right. But real estate in itself, it's always a great investment. It's always a great investment. You just got to know, when to buy and when to sell, right?
Hmm.
And you have to
Hmm.
have a place to live. So why pay rent if you can actually afford to buy and go ahead and put that money and don't sell on the down market. Hold on to the property until the market goes back up if the market goes down. If you're
Hmm.
scared of the market going down, just hold on to it until it goes back up. But one of the points I actually wanted to bring up was you talked about the sellers paying the commission. And I can't actually quote exactly on this. I'll have to look it up on Google, but there was a lawsuit that actually was against Remax and National Association of Realtors, where home sellers sued and they won for the sellers not to be paying the full commission. So is that going
Hmm.
to actually set precedents, for the rest of the country? We don't know, but they actually did win in this. I can't remember what state it is. We'll have to look it up.
Hmm.
But the sellers won. They don't have to actually pay the full commission. So that's something that may be coming down the road. We don't know where they put the cost onto the home buyers for paying for the
Hmm.
commission.
Well, I mean, remains to be seen. I mean,
Yeah.
yeah, at the end of the day, what homeowner, the buyer, is going to, have the money to pay that? So,
Right. Right.
um,
Yeah.
you know, um, there's a great guy I listen to, Ricky Caruth, down on the Panhandle. He's got a big following, but you know, I just don't see that playing out. Um, it would crush the real estate market, and so I don't think it's well thought out. I think you had some homeowners that felt like they had some sort of a beef and got together, and so that remains to be seen. To be interesting to see how that plays out, but
Yeah. Yeah.
it's really, you need representation, and who's going to want to go about buying a home on their own if they've got to put up front the costs for an agent.
Right,
It's
right. And most home buyers are just struggling to get the closing costs, actually, the down
sure,
payment, for
sure,
buying the real
exactly.
estate. So yeah, this has been a great conversation. I appreciate everything. Any
Thanks for
final
having
last
me.
words? You're very
No,
welcome.
thank you for having me, and I appreciate it. And you can follow me on Mark Neely Home on Instagram and YouTube and
You also
TikTok.
have a website, Mark, or no?
Yes, neelylendinggroup.com.
Okay.
NEELY lendinggroup.com. There you
Okay.
go.
Thank you so much again for being with us.
Thanks,
Everyone,
Pam.
reach out to Mark if you're thinking about buying, and then also the buy down. Ask more questions about the buy down. I think that's actually something that's definitely, educational for a lot of buyers because they don't know about the buy down, and that's something that you also do, right?
Mhm.
Yeah. So just reach out
Absolutely.
to Mark. Yeah.
Sure
Everyone,
do.
stay safe, be blessed, and we will see you soon. Bye bye.